For many of us, 40 marks the halfway point. With the average life expectancy in Ireland now just north of 80, how we manage our finances at this halfway point will have a ripple effect on the second half of our lives. You're likely earning more in your 40s, but let's be honest. So are your expenses, mortgage payments, childcare or college costs, maybe aging parents, and that ever-growing voice that's reminding you to save more for retirement. According to an ESRI research, average household spending peaks between 40 and 49. This is the pressure zone, but it's also a pivotal point. So if you're ready to learn which financial milestones will set you up for the rest of your life, you are in the right place. In this video, I will walk you through the 7 key financial milestones to hit in your 40s. Hi, if you're new here, welcome. I'm Elliott. I've worked with some of the world's leading banks and hedge funds across New York and London. I'm now a certified financial planner based here in Ireland, helping people to build true, lasting wealth. So how do I know what milestones actually matter in your 40s? Well, I help people in this exact stage of life to navigate the financial pressures of careers, kids, and mortgages, all while building towards long-term financial freedom. I've seen firsthand what works and what doesn't. So let's break it down. Milestone number 1, know your net worth. Net worth is the total value of everything you own, your assets minus everything you owe or your liabilities. It's a snapshot of your financial health. Your assets include things like cash in your bank accounts, investments in things like stocks or funds, property including your home or any rental properties, and your pension fund. On the other hand, your liabilities include things like your mortgage, any car loans or personal loans, any student debt, credit card balances, etc. So let's say you have 50,000 in savings, you have a property worth 200,000 and you have a 100,000 euro mortgage on the property. Your net worth is 150,000. Simple but powerful. So now start by listing out everything you own, then subtract what you owe. This is the financial baseline. According to the CSO, or Central Statistics Office, the median net worth for an Irish household with people in their 40s is 307,000. If you're under that, you're not alone. But this is the decade to get serious. If you want to compare your number in more detail, check out my video on net worth by age in Ireland. I'll link it in the description below. Wealth is funded contentment. It is the ability to underwrite a meaningful life, however you define that. So start by knowing your number, then we can work on growing it. Milestone 2, build financial resilience. As we begin to accumulate wealth, we need to protect it. In your 40s, the stakes are getting higher. You may be the main income earner. You now may have a mortgage, kids, or other family members that are depending on you. That's why protecting against financial shocks is non-negotiable. Start small. So step number 1 is to cover your deductibles. This means having enough cash set aside to cover your highest insurance excess, whether that's your health, home, or your car. There is much debate in the financial world about the financial order of operations, with many agreeing and disagreeing with Dave Ramsey, the OG of this, and his order of the baby steps. In my view, most families don't need a giant emergency fund overnight, but they do need protection because small shocks can become big problems. Step number 2 is to eliminate high interest debt. Debt is like a silent wealth killer. It chips away at your income, your savings, and your peace of mind. Focus on eliminating non-mortgage debt, such as your credit cards, overdraft, personal loans, or high-interest car finance. Prioritize the worst debt first and use the avalanche debt payment method. This targets the highest interest first for maximum savings. According to the CCPC, Irish consumers paid over 280 million euro in credit card debt alone last year. That is money that we could be using to invest or save for future goals. Debt is reverse compounding. It grows quietly, just in the wrong direction. Now, step number 3 is build emergency fund. An emergency fund should cover 3 to 6 months of essential expenses. And if you're self-employed or the sole earner, you could be looking to aim that to be between 6 to 12 months. Keep it in a separate, easy access account, not on your main current account. This isn't money to grow, it's money to guard. So don't wait for the storm, build your buffer before it hits. So your goal now, build your buffer, kill the debt, and stay resilient no matter what comes next. Milestone 3, build human capital. Your 40s are when your income typically peaks, but income itself isn't enough. What you really want to build is career or human capital. Human capital is your unique mix of skills, experience, relationships, and reputation. It's what makes you valuable even irreplaceable in your field of work. According to the Central Statistics Office, or CSO, average earnings in Ireland rise sharply in your 30s and peak at your 40s. That makes this decade your prime window of leverage. Sahil Bloom defines leverage as the ability to do more with less through tools, people, or capital. In this case, your tool is you. So how do you build human capital? Upskill into higher value roles, specialize in areas that are hard to automate or outsource. And I might cringe with this point, but potentially launch that side hustle or the business that you've been thinking about. Cal Newport, the author of So Good They Can't Ignore You, argues, control over your time and income doesn't come from chasing passion. It comes from rare and valuable skills. So ask yourself, are you investing in your skill set in the same way that you're investing in your pension or for your future? Because human capital compounds, and this decade is when the returns really begin to show. Milestone 4, fund retirement aggressively. So let's be real, retirement is no longer a far-off concept. In your 40s, unfortunately, it's on the horizon. This is the decade to get intentional, to fund your financial freedom. According to the central bank, nearly 1/3 of Irish workers between 35 and 54 have a significant pension gap. That is a huge red flag. Because the longer you wait, the more you will need to save and the harder compounding is going to have to work to catch up. But there is good news. If you're in your 40s, the revenue approved contribution limit is 25% of your income. That is, you can get tax relief on your pension contributions up to 25% of your income, noting the maximum salary allowed is €115,000. So let's look at an example. Mary earns €80,000 a year, so she can contribute up to €20,000 into her pension. If her employer offers a 5% match, that is an additional €4,000 going into Mary's pension pot for a total of €24,000, and it all grows tax-free. She also gets to reduce her taxable income by €20,000, resulting in a significant saving at 40% marginal tax rate. So remember, automate your contributions, take full advantage of your employer match, and lock in those tax reliefs while you can. The goal isn't just to retire, it's to retire well. Milestone 5, prepay major life goals. In your 40s, you're likely juggling more than just your future. You might be thinking about your children's education, a major home upgrade, or caring for a family member. These future expenses are becoming real deadlines. So let's make a practical plan today. Step number 1, grab a pen and write down your 3 biggest future costs. For most Irish families, this may include things such as your college fees. The Irish Times estimates that it could cost €50,000 to put a student through 3rd level education in Ireland. 2 would be home renovations, which typically range between $30,000 and $50,000. Then we've got family care needs, including support of elderly parents. Step number 2 is to create goal buckets. For each priority, take these steps. Open separate accounts, label them clearly, whether that be college fund, home upgrade, or family support. This will make goals more visible, easier to track, and harder to ignore. Choose the right savings vehicle, and it should be based on a time horizon. So for it's a short term, under 3 years, use a fixed term deposit like Raisin Bank, which could offer rates up as high as 3%. For medium term, between 5 and 10 years, consider a diversified low-cost investment option. Now let's take a closer look at a real goal, college savings. If your child is 10 years old, you've got 8 years to save that €50,000. That's about €520 per month, assuming a very modest 4% annual growth rate. If you can't hit that number, start with something that's much more manageable. Even 100 or 150 can begin to build momentum. An additional tip here is to automate your transfers every payday. Set up amounts like 200 for education, 150 for home upgrades, 100 for that family holiday, or to family care. Consistency matters more than perfection. Think of this step as financial stress prevention. If you plan ahead, you avoid borrowing later. And that's one less pressure in an already busy decade. Milestone 6, review your mortgage strategy. Let's talk about your mortgage. For many Irish households in their 40s, mortgage is still the biggest monthly expense. According to the central bank, the average outstanding mortgage for homeowners in their 40s is around €140,000, which brings us to the next point. Should you be overpaying it? Well, the answer depends. So start by reviewing your rate. Many Irish mortgages are still above 3.5%. If yours is higher, it may make sense to refinance or switch providers. The CCPC has a brilliant mortgage comparison tool and it allows you to calculate overpayments. I'll link the description below. Let's say you've already built a strong emergency fund. You have consistent pension contributions and you've cleared your high interest debt. At that point, making small overpayments on your mortgage can really move the needle. Even one extra monthly payment per year could knock years off your term and save thousands in interest. But, and this is important, don't sacrifice liquidity or investment growth just to be debt-free sooner. If you still need flexibility or you're focused on growing investments with a higher return than your mortgage rate, then overpaying may not be the priority for you right now. It's all about balance. Your mortgage should be a tool, not a trap. Milestone 7, protect your health and your legacy. In your 40s, protecting your future isn't just about money, it's about your health and your family. So let's start with healthcare. If you haven't already, review your private health insurance policy. Check what's covered and what's not. Ireland's public system can be really slow, so having good cover for hospital stays, operation procedures, and diagnostics is key. You can compare every plan side by side using the HIA.ie, which is the Health Insurance Authority. Now let's talk about your legacy. Only 30% of Irish adults have a valid will in place, according to citizensinformation.ie. And even fewer have a power of attorney. Do you have a will? If not, it's time to put one in place. It doesn't need to be complicated, but it should clearly state who inherits what, and name a guardian for your children if needed, and ideally appoint an enduring power of attorney in case of any illness or incapacity. Remember, this isn't just about you. It's about protecting your family from uncertainty, legally and financially, so that they are protected and not left guessing or unprepared. As Sahil Bloom puts it, generational wealth isn't just about money, it's about structure, preparation, and protection. You've worked hard for what you've built. Now it's the time to protect it and pass it on with intention. All right, there you have it. The 7 key financial milestones to hit in your 40s. From getting clear on your net worth, to funding your pension, to protecting your health and legacy. This is your window to build financial momentum. Remember, your 40s are about building momentum. If you're already hitting some of these goals, brilliant. If not, don't panic. The best time to start is always now. I would love to hear from you. What milestones are you focused on right now? Drop a comment below and let's help support each other. And if you want to see where your net worth stands in comparison to others in Ireland, check out my video, Net Worth by Age in Ireland. It's linked below and right here on screen. If you found this video helpful, please subscribe and give it a like. It helps others find this content. Thank you for watching.